All right, it is Sunday morning, and I'm doing a weekend market update as is our tradition every weekend. Typically, they're on Sundays. Today, we're going to revisit this NASDAQ chart. This is a video I have paused from April 6th, Sunday, April 6th, weekend market update, when we talked about my primary scenario. My primary scenario is not what we're looking at here, this drawing. This drawing was me saying, um, you can't claim that we're in a new downtrend unless mind you, this is when everyone was claiming that, we've started a bear market, unless a set of circumstances emerge on the high time frame which look like this drawing. And this leg was not even remotely enough to make any sort of claim that a new downtrend was starting or there was a double top. It wasn't there. I'll play the video to then remind everybody, not like we need a reminder. We know how bullish I am, but where I thought we would be going, what it would look like, and then we'll get into what it looks like now, what I think is going to happen next. We'll go to the really important chart, which is the SPX denominated in M2. We'll then look at Bitcoin, revisit last Sunday's video on Bitcoin. Not the video itself, but the chart, now that it's updated. USDT, which really has been the most the most critical signal this entire bull run, at key inflection point, should I say. We'll look at the yields, we'll look at oil, we'll look at the dollar, and then we'll call it a day. So this will be a nice video with a whole host of things that I cover often. All right, so we're back at April 6th. So a few months ago, this was the chart, right? Straight down for 1, 2, 3, 4, 5, 6, 7 weeks. Peak fear greater than it was in the COVID crash. And here's what I was saying. Trend, and then I can entertain. Okay, then I can entertain that. But right now, that's just speculation. And so the base assumption is wherever this thing ends up is a V-shaped recovery until I see any of these other. All right, so base case assumption is a V-shaped recovery. Great, let's get out of this video. Let's pull up where we are today. And what do we got? We have a V. My V was not as steep as this V. My V was something like this, right? This one is steeper. Great. Who cares? Doesn't matter. Point being is when you see this type of energy, and I was talking about this a lot during that time, driven by headlines, that this you're just pulling a spring back here. This is basic physics, okay? When everybody's scared, that's basic physics manifested in financial markets. Now, what was I saying? You got to be worried about. You got to be worried about this, right? Potential trend change if you were to reject on a 30-week, get back in the cloud on no news, right? Nothing's going on. There's nothing in the background. Nobody's scared. There aren't any reasons the market's going down. That's when you're vulnerable, not when there's a million reasons, tariffs this, tariff that, and the markets just go straight down in fear that rivals what we saw at the COVID lows. That's the opposite setup. And I made a video for the members. It was a couple of weeks later, and I attacked the market, maybe the second or third largest derivative position I've ever put on through the Bitcoin miners, believe it or not. Like you probably call me crazy, like mental, to do something like that back then. But there's a thin line between that type of thought process and conviction and what you think's coming next. The asymmetry and the upside in an idea is there when nobody thinks it's there. And flip side to that, when people might think you're crazy to try to take advantage of it. Great ideas from a financial perspective aren't necessarily the greatest when everyone thinks, oh, that's a great idea. That's probably not a great idea if you're getting a lot of support. And so yeah, I felt like sharing that because I also kind of put my money where my mouth was, and I did that through call options, believe it or not, which we're still in. And I don't recommend calls, smallest percentage of the portfolio by far, but that's neither here nor there. Just a sidebar. All right. So next, what are we doing? What are we where are we going from here? I don't know. I mean, look, everyone wants a pullback. See, so here's a problem, right? You have a lot of institutions that went to cash and because of uncertainty with the tariffs and the implication. And these aren't, funds that would necessarily, reallocate the entire percentage the next week or 2 weeks. Um, we haven't necessarily gotten, signed trade deals. Maybe we have, maybe we haven't. I don't follow the news. Okay, that's secondary to me. We are in a secular bull market, and so my assumption here is that there's still a lot of sideline capital. The market's getting away from them, and so remember me saying a couple weeks ago we are not getting a test back here. I mean, I was being very very bold, right? I was being bold, and I was saying I don't even see us coming back, 4%. I said the downside risk in this channel up here is a percent and a half to 2%. And there's reasons for that. The reasons for that. The first I just explained. The second is when you get a cloud failure and a reclaim, a subsequent reclaim in that quick of time, and a reclaim of the 30 week, that is one of the most powerful things you'll see in markets ever. And they don't occur very often. Okay. They don't occur very often. The last one we saw was COVID. And so here, the path of least resistance, the risk is to the upside. The risk here is to the upside to in a path that's gonna be very difficult to project. So we could be kind of forming a three. This looks like a 1, 2, runaway three. Maybe we get a local top at the end of July or early August, something like that, which really takes us into here, followed by a little pullback into October, which seasonally is not the greatest, and then prepare for an end of the year run that goes a lot higher than people think. I don't know. I'm not here to try to figure out the daily directions, but this is a bullish setup. This screams continuation. Markets are at all-time highs. And so well, I just think we just keep going. All right, next SPX M2. And so this is the implication and why I say like, we keep going. The path is going to be very difficult to project. I see a lot of people comparing. Let me just go back to the NASDAQ. I see not a lot of people. I see a few, and I respect them, really respected accounts. Um, sorry. Really respected accounts I'm talking about that saying like this setup now, we have to be cognizant of kind of what happened around this COVID low, right? Where you reclaimed the 30 and then I mean, there was a couple of weeks here where you had some ranges, right? Where it ranged in June. What was this range here? Like these are pretty violent. I mean, you're talking 6% candles here, right? In June of 2020. And so to the downside and to the upside, but then it continued going up. The difference between this setup and that setup is found in the SPX M2 denominated in money supply, or SPX denominated in M2 money supply. That's what I meant to say. And here's the difference. Coming out of COVID, this is that location when I look at this chart. Breach of the cloud, didn't reclaim the cloud, okay? You not only didn't reclaim the cloud, but you got to bump up against a 30-month simple moving average, 1, 2, 3 months, okay? That was what's caused the consolidation, the rejection, those wild 6% swings in the NASDAQ came in this area. And so what do we look like now? Like, how does this look now? It's the opposite, right? Look at this. You got a complete reclaim of that 30-month. You tested this entire 30 year accumulation structure, and now we're at challenging all-time highs denominated in local all-time highs denominated in M2, not all-time highs, because that's here. That was made in the dot-com bubble and bust. So we're more closely mimicking this setup, okay? This is the setup, and I've been saying this for months and months and months and months and months. This is the setup that it looks like most closely. 1996, September 1996. What did that precede? That preceded, you can see what it preceded, right? Oh, let's just do where did it go? There it is. All right. So SPX denominated M2 went up 85% within, what is it? Oh no, it was 97. Or no. 96. July 96. So 3-4 years, something like that. Okay. That's what this setup closely mimics to me. All right, next. Bitcoin, weekly last week, that's all I did was the road to 300-400K Bitcoin. People were getting bearish again, and Bitcoin was a clear signal in terms of what I thought the markets were going to do. So that's all I presented was Bitcoin. And what do we get? Where were we when I was doing the video? 98, 99,000. I said, look, this is the most bullish of the three setups that have preceded, or the two setups that precede structurally where we look right now. And I made the case for why that is using power expressing itself in the RSI, power expressing itself in the RSI, power expressing itself in the RSI, simply getting a check back after a first pump, simply getting a check back after a first pump, simply getting a check back after a major first pump, overshoot back to the MA is not bearish. That is completely within a mean reversion check back prior to a slingshot move. That's what a slingshot basically is, right? You're pulling it back before you make the next move. And so, again, that's what we have set up right now. And is it going to break out now? Sure, it could break out now. Could it consolidate? Could it fake people out? Could it wipe some leverage out early next week before it moves? Sure, it could do that too. It could do all of those things. I don't know. I don't care. What I know is, well, what I believe is, because again, reminder, I'm not a financial advisor. You all know that. I'm just here to give you my convictions. Please use this as education. I always say that up front. I forgot today, obviously. So what I believe is what I've been saying the whole time is this next impulse takes us to 1, 2, 3, 4, 5, somewhere in the 180 to 220 range. Okay. The next maybe 1, 2, 3, 4, 5 week consolidation I see happening when we get somewhere north of 150, 160, 170, something like that. And then maybe an ABC, maybe there's a triangle, maybe it lasts 6 months, right? Where this is the 3, 4, this is the 1, 2, and we're blowing off into 5. Who the heck knows? That's, how long did this last? That lasts a long time. So that's continues to be how I'm viewing this market, very healthy. USDT, again, we've been focusing on this chart a lot. I said, I don't remember when I said it, but I said this can go up and fake out and get up above the cloud, or try to get up above the cloud. But I expect that to fail. And so far it's failed. And now we're below the cloud on a weekly. We're below the baseline. We're below the conversion line. You have a bearish cross. Again, the conversion line crossing under the baseline. That happened. The last time that happened was October, the last week of October and the first week of November 2024. What did Bitcoin do? The last time it happened before then, it was October 23rd, 2023. What happened from October 23rd, 2023 to March 2024? See where I'm going here? So again, be really nice to see this weekly close below the cloud. And then if that's the case, I'd expect continuation this week. If we hold the cloud this week, maybe still some consolidation left. I don't know. Maybe a quick spike up. I don't know. But again, the direction, the monthly Direction to me is there. That's where it's going, which corresponds to Bitcoin moving up. Yields finally look like they are trying to roll over. You got to push down into the cloud on a weekly. And there's not much else to say here. Here's the kind of the path that I've been projecting on yields. I've been calling this entire thing bearish. This is all overlapping for the Elliott wave folks that are trying to learn a bit more. You keep things simple, okay? When you see anything that looks like this, that's overlapping, that's corrective, okay? Corrective, very common in a B. When we see things that are, more straight up and down, right? That can be potentially impulsive. And within larger scale corrective moves, you can see impulses, right? This is an A wave, that's impulsive. B wave, corrective. C wave, impulsive. Larger scale, this thing is high time frame overlapping. What's this entire thing, high time frame? Okay, so we think about the big piece of the broccoli, then the smaller pieces of broccoli. The biggest piece of this broccoli here is what? It's all what? What is this? It's all overlapping. That is all bearish. That's all bearish. And so all of that has informed what I think is the next move, and that's, completing this large scale distribution. And that's what I believe is going to be this C leg down to 3-4, 3-4, something like that, end of the year. The dollar, same concept, folks, with a dollar, right? Forget Elliott waves, forget, redistribution, forget everything and just say to yourself, first and foremost, when you're looking at a chart, what is this? That's a parabola. What's a parabola? It's an impulse, right? That's an impulse. 1, 2, 3, 4, 5. 1, 2, 3, 4. 1, 2, 3, 4, 5, extend to fifth, right? 1, 2, 1, 2, 3, 4, 5, extend to third, right? So sometimes it's not as clear, and you see like, man, there's a lot in here. Well, there's an extension in there. There's a third wave extension in there. What is this? High time frame. What is this? This is all what? It's all overlapping. That's corrective. B wave. What happens after B? A, B, C, right? What are we seeing here? C. What's C? Impulse. 1, 2, 3, 4, 5. Now, where are we? And then you combine that with a redistribution, thought of a redistribution as you understand them, and you get some very powerful signals. And so we've been seeing 1, 2, I've been saying 3, 4 seems to be concluding here, and we could be making the move down to C here. Or, we still have a check back to 4 and C. I don't know. Doesn't matter. This is in markdown. That's the point here is this chart is in markdown. I think the check back already happened, and it looks like it's going to mark down, which is great for risk assets. But even if this were to consolidate, like drop, let's say to here, start consolidating here, risk assets would continue to take off. We've seen that before where the dollar ends up consolidating and then take 3, 4, 5, 6 months to change its trend while risk markets continue to move up. But we're currently in this markdown phase, in my opinion. US oil. This was another fun one I did at the beginning of June when I said, look, this is a complex redistribution as well. We at the time, where were we? June, we were here. Okay, we were here. We were in markdown phase. But I said the market is going to throw people like for a loop, right? Just because you've marked down and look at this entire, right? This is the range, and the range was lost. There's big money implications in here, okay? In terms of institutions, sovereign wealth funds, things I don't even know about that are offsides or on the wrong side of this thing and need to cover positions, right? If this is inevitably going to go down to here. And so my thought was, and the news and all this nonsense that went on, I don't even get involved in that because I don't believe it. I think this is more about money. And I think, when I said I see a check back up here into the cloud potentially, and then we come back down, right? I said I could see that happening because there's a lot of implications here a lot of money implications and some shenanigans to go on. And I shared that video yesterday on my X feed, and that's what happened. That's what happened. At that time, I didn't mention anything about news, but that's exactly what happened. And here we go. Uh, you got this move, no acceptance into the cloud, rejected a 30-week, and now it looks like it wants to resume markdown. Whether it consolidates here or not, whether we get another check back or not, I have no idea. But I found that interesting how that's all transpired. And we were thinking about this option in the charts back in June. So, folks, that's it. Hope you enjoyed that. Have a great rest of your weekend. Take care.